All right, good afternoon, everybody. Should be on the YouTube and the VTF with no echoes. I was waiting for Varun, but we'll just get started. I'm an associated member of T3 Trading Group, which is an SEC registered broker-dealer and member of FINRA. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition, not anybody else's. Weird, on the VTF I have two screens showing the disclosure. One is very clear and one is very blurry. Are you guys seeing it blurry or clear? Weird. Blurry. If it's blurry there, I would recommend going over to the YouTube. There's the position disclosure. Changes to it I got out of S, which I'll look to rebuy a dip on. And I got out of, I think it's a U Pro short. I got out of that. Also traded a bunch of names today that got flat. I was short Meta, got flat. I was short TQQQ again today, got flat. Short AI got flat. Long TNA got flat. Good day trading day for me, actually, as far as entering positions and closing them out with profitability. I made money in every day trade I took today. All right, let's take a look at our markets. So we closed down. SPYs are down 0.5%, Qs are down 0.25%, and the IWM is down a whopping 1.7%. I mean, this is the big thing here today, is that this IWM weakness down 1.7%. The Qs only down 0.25%. It's really not what you want to see if you're looking for mean reversion. It's a really, really big difference. And the intraday price action difference was stark. Qs were just holding in so incredibly well throughout the trading session if you compare it to the intraday of the IWM. The IWM, this market was just, if this is what you're looking at, it was getting absolutely destroyed. The Russell was getting absolutely destroyed today, and the NASDAQ was holding in like an absolute champion. At one point today, the Qs were flat, and the IWM was down 1.5%. Just not what you want to see. You're looking over at the daily chart. Qs don't look like anything happened at all. Building out a bull flag. Bullish rest day. ADMA slowly catching up. IWM looks like absolute destruction. Luckily, we got a little bit of a rally into the close, so we didn't get a close on dead lows. Last 10-15 minutes was a decent little rally there for the entire market. That's a pretty bad looking candle for the IWM. You want that candle, if you're bullish, you want it to be smaller, and then maybe on like a second day or third day down, creating a pivot low that's a higher low on the daily chart. I mean, even with the size of this, it's kind of a bearish engulfing candle. We still could get the higher low. That's what we're looking for. We could still get that higher low. I mean, the previous low is at 168. You know, you could pull down to 172, 173, and kind of get your higher low there at some point over the course of the next couple of days, pivot and begin to work its way back up. But I definitely did not want to see this degree of relative weakness out of the IWM, as I'm looking for a higher low to build in and mean reversion to continue. And then your S&P was somewhere in the middle. The S&P coming into today with this gap up was the most extended to the upside of the three indices. That's why it was my main short focus yesterday afternoon and into the close. I kept some overnight. So this thing is still pretty extended at this point. 408.80 is where it's trading right now. 404.12 is where that ADMA is. Keep in mind that ADMA is going to continue to work its way up. So just a good corrective price day for the S&P. So the S&P is giving you pretty much exactly what you want. It got ahead of itself. The Qs are giving you exactly what you want. Yesterday was also a rest day, an inside day for it. Today was a second rest day for it. IWM weakness here, the degree of that IWM weakness, a little bit more of a concern. And again, I think the spread between the Qs and the Russell, a little bit more of a concern. But it's not necessarily the end of the world for the Russell yet either. So we'll obviously continue to eye that. My thought process coming into today is that we would begin to see corrective price action today, and my expectation is that that could last the entirety of the week. We have a pretty interesting situation that's going to be happening on Friday with a really important jobs number hitting as the equity market is actually closed for the day. I don't really recall that ever happening previously, and such an important number coming out when the market itself is actually going to be closed for a holiday. So that's going to be interesting, and again, just in terms of that being in front of us, and just in terms of where these technicals got to with the degree of extension that the SPYs and Qs have had, seeing corrective, choppy action for the rest of the week would make plenty of sense. In some ways, so today gave a lot of opportunity actually to the short side. And in some ways, I wouldn't be surprised if today ends up having the most opportunity out of any day this week if we continue to kind of chop around sideways or continue to price correct. I still have the SPYs up here. It closed at 408.80. SPYs could continue to technically correct to 405, but like Pat was talking about into the close, when I was trying to decide if I want to keep any shorts overnight at this point, the risk reward just becomes a lot more difficult here on the short side. We're back into that area where you got $4 to $5 of extension. Putting on new shorts after you just had a decent sized pullback, just looking for that little extra oomph of corrective price action to maybe 405. Though it could be lower, we could correct down to 402. It just makes it a little bit trickier as a trade, but by no means are we at the spot where I think we have the setup to come in and start buying. SPYs are still extended. They still need to correct further. Even the Qs, which are not as extended, they need more time to potentially build out a bull flag, let this ADMA catch up. And obviously I'm talking about the bull case here. And this IWM, the IWM is fully corrected as far as I'm concerned. As someone, I think it might have been Tate, kept reminding us that this IWM, even though it was the least extended to the upside, it did have a $10 move in just a handful of trading sessions from lows to highs. And unlike the SPYs and the Qs, this one actually started from extreme extension to the downside Friday a week ago to some extension to the upside. Whereas the Qs, for sure never had any extension to the downside. Maybe a little bit back here on March 13th. But nothing since our banking crisis really began. The NASDAQ has just been phenomenal. So as far as today's trading session goes, we had a gap up this morning. That's a gift. On a day 5 move, it's a gift. Ideally, it would have been coupled with $10 of extension from the ADMA at the open in SPYs or Qs. So you didn't have that. You didn't have maybe the perfect ideal situation, but it's just been such a massive move, and you get the gap up on a day 5. I think it really was a gift for looking for short execution. With that said, most of the stuff that I had on my short radar today was tech, and the execution on some of the tech names for that RDR to the downside that we were really looking for was very difficult. It worked great for the SPYs. Obviously, if you focused on any IWM correlated names, which is not where my focus was on the short side, that worked really well also. But I was able to short. I was short SPY via UPRO going into today. Pre-market, I more than doubled my position, and that ended up actually being above the high of the day, I think. Let me take a look. The pre-market, so pre-market we were as high as 412.50, and if you guys remember yesterday, 412.50 I was saying was really the spot that I would want to come in and short a little bit more ideally. Obviously that's yesterday, so each day that goes by it lets that ADMA catch up. If the ADMA was still where it was yesterday, pre-market we would have had that $10 of extension plus the day 5, but so ADMA catches up a little bit, the $10 of extension becomes more like 414, but you couple it with the fact that it's a day 5. So I pretty aggressively shorted UPRO pre-market. I announced to the VTF that I was doubling my position size, and I pretty much, luckily, and this is luck, more or less got very near the top on that UPRO short. So that one obviously was a solid winner because it never even got back to that price during the trading session. Intraday today, I ended up shorting T-Triple-Q as well on an intraday basis, which was really not actually initially in my game plan, because the Qs on the daily chart is not as extended as the SPYs were. I shorted them on the way up, kind of into this area. I actually thought we were going to get a lower high. We didn't when the 10 a.m. number came out. And this is actually, the 10 a.m. number is what made the tech shorts very difficult today. Because it was at 10 a.m. that most tech names and the Qs themselves actually broke their opening high. I don't think it broke the pre-market high. Just looking, I still have T-Triple-Q up, doesn't really matter which. No, we did not break the pre-market high. But the fact that we broke the opening high actually made the Q short and some of the, Apple, Meta, Netflix, though Netflix I think still held, that was all kind of on our list. It made that short a lot more difficult. So I actually started shorting on the way up right in front of the 10 a.m. number, which is always a little bit dangerous. That 10 a.m. number showed, that's the JOLTS job opening report, showed that there were, came in under expectations, which that's one of the biggest things that the Fed is looking for to actually stop increasing rates. So I felt that JOLTS coming in under expectations like that is actually a really bullish thing for the market. But you got to take it in conjunction with the fact that it's a day 5. So I was out of the money a bit on my T-Triple-Q position. My sizing was appropriate for me to be that way. And I was watching it like razor sharp focused into this area here, because Pat made a great comment around that time, and he was like, well, watch out here, because if the Qs do hold, we could get a rip. But the flip side of that is if we can negate the initial move, it's actually like a very bearish signal. And Pat's thought process was super on point with that. The IWM being weakest negated that news bar within 5 minutes. So that was one thing that I was paying attention to. Even though I'm short Qs, I want the Qs to go down, not necessarily the IWM to go down. I'm paying attention to that because I still think, and I saw Steve's question a little bit higher, I'll circle back to it in a minute. I still think that even though the IWM as a leader has gone down a bit since that banking crisis, because it's just a new event that changed the market environment, we haven't seen that same degree of leadership from the IWM that we saw so regularly in 2022, where IWM breaks up, SPYs and Qs follow, IWM breaks down, SPYs and Qs follow. We haven't seen that to the same degree this year, but it's still certainly notable, like, okay, look, the Russell, which represents more stocks than the Qs do, is already breaking that low. And I remember the Qs and the SPYs putting in inside candles at that time. SPYs actually were able to break that inside candle up, but it seemed like it was more because the Qs did than anything else and didn't give any follow through. The scary one was the Qs. Qs gave the inside 5 and up. It ticked a new high. To me, and this could just be because I've been trading for a long time, when I saw the Qs tick a new high but immediately come back below it, it looked like one of those buy stop triggering kind of ticks in the market that like trigger a bunch of short sellers buy stops and then immediately kind of tick back down. It was almost like a very violent, very fast tick up followed by that immediate tick down. And I was like, okay, that's interesting. And then next thing you know, you're below the inside 5 low. And then the big thing that I was paying attention to that I kept pointing out to was the 10 a.m. low, which is 320.51 for Qs and is that 411 for SPYs. Once I saw us get below 411 for SPYs and then shortly after 320.50, I felt much more confident about the shorts that I had on, which included T-Triple-Q and included Meta, which was very strong and frustratingly strong early on in the day. I had one break-even trade in Meta. Luckily, it was actually a keystroke to go way heavier than I meant to, and then I put my stop in at the high, and I was able to take half off, and then I got stopped out of that other half. And kind of kept a little bit of a core position and watched Meta as it weakened out a little bit. But that was when I was able to finally get paid a little bit on Meta, though I'm not super. I ended up green in Meta, but not super profitable. And And then the bigger winners for me were, again, that U Pro short that I ended up closing out of, and that T Triple Q short that I ended up closing out of as well, kind of near lows actually on the Qs. So that worked out pretty well. I got out of this, I think, somewhere right around here in this last dip before that rally of the last 10 minutes. So they made it difficult, especially like Apple was one of the names on the list for an RDR that we were looking for. It was looking so good. Broke through there. There's your short signal, working all the way down, bouncing back more than you wanted to. 10 a.m. number comes out, causes the squeeze above that opening high. Easily could have stopped you out. And then Apple actually stayed really strong throughout the rest of the day. Netflix was another one. This was probably one of the better ones. Netflix with the RDR back through yesterday's high, so your short versus today's high. Got some follow through with that, but then even this kind of went sideways a little bit. GE was another one I mentioned. This actually initially seemed like the more difficult of the trades, and I took it off my radar. But GE on like this day 3 extended on the daily chart into some daily resistance as well. Back through yesterday's low, you'd have to give it the highs, so that actually made that execution much more difficult, but gave better follow through because not a mega tech stock that held in really well. And then the one that I chose to focus on was by far the hardest. Meta trading back through the previous day's low pretty much right at the open, but closing the bar strong, continuing to be strong, and not till after 10 a.m. did it actually weaken out a little bit. So that trade was actually very difficult. So all in all, the thought process was completely on point. The name selection could have been better. I really thought, it's interesting that the IWM underperformed the Qs by such a vast degree. Because pre-market they were trading around the same amount when we were doing the morning meeting. They were both up like 0.25% or something like that. So certainly, again, right thought process, looking for the technical pullback, looking for the RDR. If you focused on SPY as short, or if you focused on some IWM related names, it was much easier. If you shorted on Qs or Megatech for that short, the execution of it was much more difficult. So again, concept was correct. I was able to make money off the concept, but the actual execution with some of those names was very difficult. And then completely separate. My best trade of the day was AI short. Pat got that news into the VTF so early during the meeting, and it seemed significant. And the stock was super extended. It was really, really easy to get stock short, and that's just the power of the Pro Desk here. I was able to get stock at like 33.50 or something like that for the short. It was like really, really very easy. Didn't hold for the whole move. I really just wanted a retracement down to $30. I probably could have been a little bit greedier, but really an easy trade, honestly. Trying to think if I got anything else. I think that covers it. I think that covers everything on my end. So I'm happy to take a look at questions that you guys have, or names that you guys are looking at, or whatever. So the first question, I kind of answered it a little bit already. It was from Denver Steve. Do I still see the IWM as the best indicator for longer term trend? So I think what you mean by that is I've been describing the IWM just as the leader. IWM has been a very consistent leader, and semiconductors have also been a very consistent leader. And it's been going on for a year and a half now. It's been going on since November 2021. Very clearly, the IWM as the leader. It started back in November 21 when you had that massive daily chart breakout in the Russell that gave 100% reversal in that month, and then was breaking down with like a breakaway gap, like island top type pattern. And that was as the SPYs and Qs actually continued to hold in for another couple months and topped out in the very beginning of January. The Russell was your first signal there. Continued to be that way throughout all of 2022. The IWM starts showing strength, the whole market bounces. IWM shows weakness, the whole market falls apart. Been a consistent leader. It's lost some of that from my visibility since this banking crisis situation. It's not always that way. As a matter of fact, there's been a lot of days it's almost obvious to see where instead of the IWM is acting weak, and instead of that eventually pulling down the SPYs and Qs, the Qs are holding up as a champion, as like a flight to safety play. So it's lost that a little bit. We'll continue to monitor it to see if it comes back. I do still think it's really important to pay attention to. It helped give me the conviction to continue to hold on to my T triple Q short today, because I saw how fast the IWM negated that that candle, and yeah, something that we want to continue to pay attention to. From Kyle, since the IWM was weak, the weak index today, would the best names to be involved have been weak names that were correlated to the IWM? If so, what are some examples of these? And is it best to look for most extended ones? I just want to make sure if something like this happens again, I have a much better game plan of what names to go to if the IWM gets hit hardest. Yeah, so relative strength and relative weakness is one of our really important layers of probability. The IWM was relatively weak, and the IWM has a lot of financial and energy stocks in it. So if you take a look at financial stocks as an example, they were like kind of brutal today. Look at KRE. KRE got destroyed. You look at Schwab. Schwab got destroyed. Bank of America had a really weak day. JP Morgan had a really weak day. You look at the intradays on those charts, they were just completely brutal. XLE. I mean, we mentioned yesterday that we need time for the XLE to reset up after the big move that it had. XLE just was a massacre today also. So, yes, if you focused on the relative weakness that the IWM gave, then you would have focused probably more on these banks and energy stocks. I think that's very difficult, though. I think that that's a much easier thing today to see in hindsight. It was not my expectation personally that the IWM was going to act this relatively weak today. Not at all, actually. It was my expectation that the market was going to pull in. That was correct. But it was also my expectation that Qs were going to lead that. And that was completely wrong. So yeah, I mean, if you could have had the better foresight to recognize that the IWM was going to be relatively weak, or to make the adjustment on the fly, which is still something that I struggle personally with a little bit with my own trading, is being able to on the fly, even though IWM very quickly on the 5-minute chart, you could see that it was significantly relatively weak compared to the Qs. I mean, you could see it in 5-10 minutes. IWM, brutal first bar, inside 5 and down, followed by another inside 5 and down for just kind of consistent downside continuation there. I didn't think it was going to last, to be honest, and that's one of the hard things that's about trading. So if you keep it simple, stupid, right away IWM is the weakest. Stick with that, go for it. There has been a lot of days though where we have seen, and this is what I thought was going to happen today, and again I was wrong, where we've seen relative strength, relative weakness flips, where the IWM is weakest earliest, the IWM starts holding in, and then the Qs begin to sell off and kind of catch up. So even when the Russell was already showing the relative weakness, I actually didn't think that was going to last, and obviously I was really wrong with that. So that's why I'm saying, like, going back to the beginning part of my meeting, completely the right idea conceptually. Name selection was not ideal. It made it tricky. So yeah. But short answer for sure. You look at your financials, you look at your energy names. From Dave S, your PDD position has been on for more than a single day. At this point, it's been a while. Why you trade shorts in the same way that you trade longs typically? Would you trade shorts in the same way that you trade longs typically, where you cover some of the position and add back at lower, or in this case, higher prices? Yes and no at the same time. I am doing that with PDD. I'm doing it somewhat conservatively. A reshorted stock that I covered on these days into this pop. I was a reshorted stock at like 74, 76, 77, 78 on this day, and I've been covering some of that over the course of the last couple days a little bit on the way back down here. So yes, you can. You just got to really make sure that you understand your risk. I'm a nervous short seller. I don't trade as good to the short side as I do to the long side. I just know myself well enough to know that it's a fact. I'm continuing to work on improving it, but it stems from the fact that some of the biggest losses, all of the biggest losses outside of SIVB, have, in my entire trading career, I'm pretty sure I've been to the short side. All of them. Where I've just gotten stuck in squeezes in BS companies that I know are not worth anything, and then that squeeze is just massive, and it hits a point where, you know, I can't hold it, or I'm just playing super defense to try to limit my loss or whatever. So you know, I just get very nervous about getting too heavy or overly building into positions. I feel more comfortable building into positions that are against me to the long side than I do building into positions that are against me to the short side, for that reason. So on the short side, it's going to tend to be, you know, momentum or extreme, you know, relative strength that's causing me to do a counter trend trade, but that's going to be more index based. Doing it in the individual stocks is what's burned me. And I got a laundry list of names where I look back on where I took a loss on the short and I cringe, but I just I just couldn't do it anymore. I got stopped at a lift on a huge position. I think $65. I got like stuck in this squeeze here, and that was, you know, if I could have endured a little bit more, that would have been it. I got smoked in Palantir at I think the break of this high here, and thank God I got out of it. Honestly, even though I was right, $34. When Palantir IPO'd, I said this is a garbage company. It's worth nothing. It's never been able to be profitable. I think it's a short. I think that the stock is worth $3. You know, ripped all the way up. I shorted it in this area. I was able to make a few bucks for myself on this pullback. This next rip came in. I got caught in it. I got stopped out at 34 or so, or even a little bit higher on size, and I never would have been able to afford to hold the size I had to this high at 45. I was right. I'm like, oh. Then I was like, if I was an analyst, I raised my price target on the stock from $3 to $7. I was right. You know, once the bubble was over, this thing was right back here where it belongs. It's $7-8, but I took a huge loss somewhere in those mid-30s, which I'm still glad I did, because who knows what I would have looked like when this thing was at 45. But it was just another example of me getting stuck in a squeeze. I got stuck in Kodak once. Before I went to the 60s. I can't see it. Did it resplit? Yeah, my chart won't even go to the highs. Some of you guys might remember it. I see a high of 44. I know it went to 70 something. BS company. They like announced that they're getting into blockchain or some nonsense back then. I'm surprised they haven't made an AI announcement yet, because that's what Kodak does. They just always said that they do whatever the hot thing is to get like a short squeeze in their stock. Yeah, that one was brutal. I got out on the way down and mitigated the loss, but I was just stuck in halts over and over and over and over and over. I couldn't get out of the position even when I wanted to. Just halt, gap up, halt, gap up, halt, gap up. Tesla, another one of my big career losses. What was the Tesla split amount? I can't remember. I think I got stopped out here. It was somewhere around like $1,000 pre-split. I got out of it. It took a loss, and then literally the next day, that was the top, and it crumbled after that. And then the other big loss I ever had in my career actually was Roku once. That was in this squeeze back in 2019. I don't mind talking about my losses, obviously. Yeah, this squeeze in here. My thesis on Roku has really switched, has changed from back then. I used to have a super bearish thesis on Roku, did not understand this business model at all. And I still don't understand, honestly, how none of these other companies were able to make a product that could compete with Roku. It blows my mind. Apple, Google, Microsoft, wake up. How did you guys miss out on this opportunity? How does Roku even exist as a company? But at this point, my thought process is that Roku's developed such a moat for themselves and have such a, you know, strong user base at this point that they're not going anywhere. And actually, I still think they're a buyout candidate at the prices that they're trading at, which is less. It's trading at a smaller price even now, you know, by more than half. I got squeezed out of this thing, I think on like here, like somewhere around here. Might have been this gap up day, 160 maybe. A few more days, boom. But you just never know where these things are going to stop their squeezes. So I hope that answers your question there, Dave, and probably tells everybody a little bit more about, you know, why my approach kind of is what it is, why I feel more comfortable. I just feel much more comfortable short the indices, because you're not going to ever see, because I don't think, what I just showed in Kodak in the SPY. It's like pretty much physically impossible. So that's why I really do prefer to trade those things to the short side. Whereas on the long side, of course, you can take big hits to the long side, but I know where the stock is trading. I have an idea of value. I have an idea of relative pricing, where, you know, I can trade my way out of stuff, or I can build into stuff, or you know, I can size up at the right times, etc. So, thanks for the question, Dave. From Ramoon, I bought GE at 9.45. I'm going to pull back to the 80 man on the 5. I didn't get to cover my risk and was stopped out at 10.10. GE had been bear flagging and an RDR was probable. It already RDR'd right when it already RDR'd at, what's this high? 96.94. 96.94. Okay, so it held that low. I don't consider this a bear flag. This is a consolidation, and it's not even necessarily a bearish consolidation. It's just a consolidation. This is a 50-50 probability of which way it breaks, just purely based on a 5-minute chart. Obviously, you can add to that probability higher or lower on breaks in either direction based on what the daily chart looks like. But if you're just purely looking at this 5-minute chart, this is not a bear flag. It's a consolidation after a down move, which is not a bear flag. A bear flag is a trend continuation pattern, so you need to have a downtrend happening into the pattern in order for it to be a downtrend. There's no downtrend here that's just up and then down and then a consolidation around the flat line mark around equilibrium. So I think taking any trade in this area is very difficult. But let me read the rest of your question. I shorted versus the high, the consolidation range at 96.68. I believe I entered both trades too early, and for the second trade my stop was too tight. Being too focused, being too early forced me to pick this stop loss because there was no way I'd risk too much and give it to the opening high. I should have waited for a pivot and shorted on the way down, covered risk, booked profit on the way down, held some overnight. Yeah, so I would start by saying, and I think you asked me, I think it was you that asked me about the GE long yesterday, and you gave me a great set of if-then statements, which I really liked. On if you get the pullback, and it was some, I don't remember exactly, but I think we discussed like looking for long opportunities into $94. The long that you took today, where you're buying the stock above yesterday's high on a day 3 with the IWM kind of failing, I really don't like the long. I don't think that it corresponds with what we discussed in the afternoon meeting yesterday, which really was kind of based on your idea more than anything else. And as a matter of fact, it was really you, or I'm assuming it was you that asked me the question in the afternoon meeting, that had me look at GE as part of my morning research this morning, that had me actually add it to my short list. So it's on the list here in the alert section as a potential short today through yesterday's high, because it's a day 3, because it had the DeMark sell set up, because it was so extended, and you could look to short GE, back through whatever that is. Let's just call it $97 versus that high as the trade. Now I understand this gave a big momentum move early on, so if you did not want to short back through yesterday's high because you felt there was too much risk, totally fine with that. And like I said, by the time this thing actually triggered down, even though in hindsight the follow-through was much easier than Apple, Meta, Netflix, this actually became the best trade. It was just off my radar by that point. And again, if anyone was looking at it at that time but didn't want to risk 80 cents in General Electric on the short side, I totally get it. So I would start by saying I really don't like your long trade. On the short, trade, I think the right way to execute it goes back through yesterday's high with the 80 cents worth of risk. And if the risk is too much, then you don't take the trade. I don't like this as a trade. Yeah, fine. If you're able to recognize this pivot, I think that's a difficult trade also, though. You get the strong positive Maribozu, you get an inside candle, the inside breaks down. We do know that one of the ways in which positive and negative Maribozus can get negated is via an inside and down or an inside and up, in this case an inside and down. So technically you could have shorted this inside 5 to the downside versus this pivot high. I don't love the trade either, to be totally honest. It would have worked, but I don't think that we should just be looking at stuff that did give a setup and did work and say that it's necessarily a really good trade just because it worked. So I think that's it. I think that, you know, the long I don't like at all. The short needs to be done back through yesterday's high, 80 cents risk. You don't like 80 cents risk, don't take the trade. Outside of that, I don't really see anything that I like. I think that, you know, you hear me say it all the time. Like, I would rather miss moves entirely than be late. Or what I don't say is as often, but it's also true, is I would rather miss moves entirely than force a setup. And this is what this feels to me like a forced setup. Like, oh, I should be short, so then you kind of force the setup here in this consolidation. But if you really take a half step back and you look at the 5-minute chart, again, maybe the daily chart says that there's a little bit of a higher probability of a breakdown in this candle. But I think if you really take a step back and just look at the 5-minute chart, you're looking at probably like a 50-50 thing. And when you look at the potential of a 50-50 move, like 50% of the chance it's going to go up, 50% chance it's going to go down, what you also end up seeing in those situations a lot is shakeouts and false moves. Because, you know, it's 50-50. So, like in this case, they kind of give the break a support, but there's no follow-through, so they give the break a resistance. They just jam up everybody on both sides of this thing. And then eventually you get some follow-through. And I think that you see those kind of false shakeout moves significantly more often in these more like 50-50 type situations. So I really appreciate the question. Glad you appreciate you throwing yourself out there with some trades that you took that did not work out today. Hope that at least we can all learn from it. From Rex on Teledoc. I traded Teledoc this morning at the open. I saw it broke Friday's high. So $26 is the level we were looking at. So Friday's high. I would 100% be waiting for $26 for this. I think if you did not wait for $26, you cheated. And if you took a loss, you take a loss when you cheat. I don't want to say you deserve it, because I understand the concept of cheating on entries, and I do it sometimes to get enhanced risk reward if I feel there's a very high probability of a break. But whenever you cheat and you get stopped out on something, then you kind of deserve it, right? Because otherwise you never would have gotten in it. And I'll tell you that I really don't like the idea of cheating on any longs today, because we didn't like longs today. You know, and we did discuss in the morning meeting the potential of short squeezes coming into the market if the market wanted to give that big escalation up to SPY 414, where a Teledoc through 26 could go, or a Roku through 66 could go, or Shopify could give an inside and up, or we didn't look at like Carvana, but you see Carvana ripping. We did discuss that possibility, but outside of that, I don't think we were looking for longs today, and that especially means, I think, don't cheat. If this thing's really triggering through 26 and you bought this thing through the 10 a.m. high, thinking, all right, wow, this thing's held in really well, it held in for a half hour, maybe we start to see these short squeezes coming in, Roku's holding up okay, Shopify's holding up okay, whatever, fine. But I really don't like the idea of getting a jump start on the entry today. So then you got long again through 10 a.m. when it broke 26. The market was going up, and I put my stop at the low of the candle, but volume didn't come in. Turns out that it dropped back down. When trading this type of setup, after you get into the stock but the volume doesn't come in, would you take your profit sooner? No. Since it looks like the breakout would mostly fail, or at least for today, would you less likely get any market up? So everything you're describing, I want to kind of know as best as I can before I take the entry. Once I take the entry, I'm following the game plan. and that's it. The game plan that I created for myself, I'm following. You know, you can always point to layers of probability on why a trade should fail. It's easy to overly focus on it. If you put a trade on, you put the risk on, follow through with the game plan that you made for it. Don't adjust those game plans on the fly. From my experience, it just leads to inconsistency in your overall trading. So, you know, I would just take the trade through 26. Well, first of all, I didn't take the trade through 26. I personally was specifically saying to you guys in the radio, like when Roku was breaking up, I was like, I'm not going long Roku. I don't care. I don't trust it. Teledoc when it went, I don't care. I don't trust it. I wasn't taking any of those trades. But I think if you do take it, you follow the game plan that you created for yourself. Was Walmart expected to have earnings, or is this just an update? It looks like an update. I still see adjusted EPS below expectations. Okay. Just going to move on. From Anthony. I know this was talked about a little earlier today in the VTF, but can you discuss why you short U Pro instead of SPY and TQQ instead of Qs? Why I see Josh always shorts the triple Qs. I don't think he always does. I think sometimes he's short Qs, but I think sometimes he's also short the lever ETFs. I don't want to speak for him. He can speak for himself. I understand that these are levered funds 3x, but what are the pros and cons? And for a newer trader, which do you prefer? I have stuck to the Qs and the SPYs. I think I maybe did TQQ once a few months ago on a few trades and had mixed results. Yeah, so I don't think that there is like such a huge advantage necessarily to trading TQQ and U Pro versus trading SPYs and Qs. I like the enhanced volatility that comes from a levered ETF. I prefer to be short TQQ than long SQQ so that decay can work in my favor over time. Maybe that's just psychological, I don't know. I haven't really done the math on, especially if it becomes an overnight, you know, how much does that decay actually add up, and, you know, borrow costs that might be involved and things like that versus on the long side, long SQQ, you know, paying overnight interest. But generally, I greatly prefer to short TQQ than go long SQQ for for those reasons. And then the other thing is sizing. I say it all the time. You know, I think it's better to trade cheaper priced stocks with more size than more expensive stocks with less size. And maybe this isn't the same thing with the SPYs and the Qs, but with stocks in general, as you're dealing with more expensive stocks, you're also dealing with wider spreads. So for me, like a great sweet spot is between $10 and $100. That's what I prefer to focus on. Doesn't mean I don't trade things that are more expensive. I obviously do. I trade, you know, Apple and Google and Amazon and all those names. But you don't really ever see me trading stocks that are like Apple is a $100 plus stock, but it's very, very liquid. You don't really ever see me trading expensive stocks that are also spready. I just find it takes away a lot of my advantage. So SPYs and Qs obviously are very thick also, even though they're expensive, and I do trade them sometimes. I just greatly prefer and I don't know what the equivalent is off the top of my head, but I would rather have 1,000 shares of UPro than 100 shares of SPYs, assuming that, you know, equates to something that's roughly similar, which I think it does. I can just do more from a game planning perspective. I can work the trade better, feel more comfortable with my risk. And then I've got the decay on my side. I've got the increased volatility of it being 3x. So that's what I like. And you know, for newer traders, I really also recommend that you stay in that $10 to $100 zone. I think it's a great sweet spot. You know, those more expensive names can be sometimes very difficult to control your risk. It can be very difficult to have the size that you want to have from a game planning perspective, and things that are too cheap can be difficult also. I'll trade things as low as $5. I generally really don't like things that are less than $5 unless I think it can double in a short period of time. The blue, Jim, is my 80 EMA. The red is my 21 EMA. The 8 and 21 are extremely important to me for my trading. My 200, my yellow here, or the gold, is 200, 200 SMA. I ignore this on the small time frames. This is just here, so that if I click over to a daily chart, I can see the 200 day. I only care about the 200 day on big time frames. It's there on my 5-minute chart because I like to be able to switch back and forth and have that moving average there. I don't ever utilize or look at a 200 SMA on a 5-minute chart or a 15-minute chart. Yeah, that Kodak was brutal. Kuala Maggie? I don't know who that is. Oh yeah, when they changed to a crypto company. Yeah. From Amon, you may have already covered this. Just hopped on. SPY and Q with the close. How do you determine if you want to hold any longs or shorts overnight? For example, SPY held 207 level intraday today. Yeah, SPY held 207 level, strong support, but had a bearish engulfing candle. And Q's held 318 support and closed relatively fine. Thoughts there? Theoretically, could you focus on just indices like SPY and Q's? Stocks have run for a while now. So I always focus on the indices, even when I am focusing on individual stocks, because the indices are the most important layer of probability in trading individual stocks. How do I decide if I'm keeping the shorts overnight? Usually a profit cushion is a big influence on that. If I was long SPYs and Qs and I don't have a profit, if I bought it today and I don't have a profit cushion by the close, which is very likely because unless you kind of bought lows and caught that last 10-minute rally, you don't have a profit cushion on the SPYs and Qs. I'm definitely not keeping them, especially when they're this extended. So one of the other bigger things I'm paying attention to is that extension. Did I buy SPYs at 407 today, and the 80 EMA on the daily chart is at 407.15, and the 21 EMA is at 405, and I've got zero extension, and I just potentially caught a pivot low of a technical pullback, and I got a good close, so I've got a good profit cushion on it, then I'm keeping it. The hardest thing for me actually to decide today was keeping shorts. Like, I'm positive in Meta, I decided to close it out. Or even, I was actually long IWM via TNA. And this was a good trade for me today also, so we could even use this as an example. My average price in this thing was probably like $30.05. And it closed at like $30.50. And I was like, should I keep this? I got this good close here. I got a 50-cent cushion on it. And the main reason I didn't was because of the extension we still have on the daily chart of the SPYs and the Qs, where I'm looking at further corrective price action. And then I'm also factoring in the fact that it would be an additional long on a portfolio that I have that's already consisting of primarily longs at this point, because I also decided to close out my shorts. So that's why I chose not to keep basically IWM long, even though I actually had a profit cushion on it that was decent because I had such a great average price on it, and I traded it pretty well. And then the flip side of this was kind of Meta that I was short, or even UPro and TQQQ that I was short pretty much for a good portion of the day. I decided not to keep any of those. I mean, I did have a game plan for TQQQ that had me get out at 27.50, so I followed my game plan and got out of it. But assuming I didn't do that and I was holding a runner or whatever, am I going to keep it? Well, it kind of goes back to what Pat was saying into the close about those shorts. If you got the profit cushion, I could keep it. Be willing to give back some open profits to see if I get a deeper technical correction in the market, which has a pretty high probability of happening. I think that there's a decently high probability that this market gives further downside correction from the SPYs and the Qs over the course of this week, or I think best case scenario is actually sideways. So why not keep it, I guess. I just didn't think that if I was entering a new position at that price in Meta that it'd be a fantastic risk reward to keep it. So I decided not to. I guess I could have to hedge out a little bit some of these longs, but Meta, I don't want to be short Meta. This was a trade, you know. I don't want to be short Meta. This is like one of my favorite companies right now that's out there. It's been trading great. Love what the company's doing as far as their cost-cutting measures. It's an absolute cash flowing monster. On the one hand, you could say that the stock was more than doubled in a pretty short period of time, going from $90 to $215. On the other hand, you could say that the stock is still less than half of what it was just back in 2021. So, not to ramble, but I think that answers your question on the thought process. The biggest thing is, first and foremost, do I have a profit cushion that I can give back? And then am I willing to give it? And then does it make sense to me to give back potentially that profit cushion to make more? If the answer is yes to both of those questions, then you keep it. Thanks, Josh. Appreciate the compliment. Yeah, even that SIVB, right? Just got to move on. Tate saying that Apple runs laps around Roku with the Apple TV. But so I don't even know how that works. So Apple makes its own TV and you buy an Apple TV, or is that still that add-on stick that you're putting in? I had an Apple TV, or had access to one of those sticks at one point years ago, and I never really got into it. The thing about Roku is that it's built into all the TVs now, and they're making their own actual Roku TVs on top of it. And it's such a simple, easy operating system. And believe me, I was a hater on Roku for a really long period of time. I just don't understand it. You had the Google Chromecast. I don't understand how Google dropped the ball on that. Netflix could have come in and created their own TV operating system. They dropped the ball on that. For a while, I thought that Netflix could be a buyer of Roku. They still could be a buyer of Roku. I actually think that the higher probability buyer now for Roku would be Walmart. Yeah, so again, I appreciate the compliment from Josh. I guess just to add on to that, it is a really hard thing to do. It took me, like, I don't know, probably 8 to 10 years of trading to really, really feel comfortable 100% all the time moving on from losses. Like that was one of the slowest things to pick up. The emotional control, being able to walk away from losses, just, recognizing that my edge is my edge and I have to focus on my edge regardless of whatever else happens. Those were two of the most difficult things to pick up and took me just a really long time. And same thing with the emotional control. And that's not to say I don't ever lose control of my emotions and get upset about stuff. I do. It just is not very often, especially compared to how it used to be. And that's what messes people up more than anything, is Josh's next comment here, is when you get stopped out at the low and then the trade works. It's happened to me countless times. It's just you had a strategy, you had a game plan, you followed the game plan, you got stopped out, move on. You can reassess to make sure that the game plan was appropriate. You can reassess to make sure that the game plan was appropriate after the fact. But one of the worst things you can do, and I've done it, is get stopped out of a stock. You see it uptick. You're long, get stopped out. You see it uptick 5 cents. You freak out. Oh my God, I got it at the low. You rebuy. Give it to the new low. Get stopped out again. It upticks 5 cents. You rebuy. Oh my God, I knew it. And then you get stopped out again, and you just churn a buy and sell 6 times, and you would have lost less if you just got in and gave it more room to begin with. I've done that. It's one of the worst things you can do. Steve, on except for the levered products, I don't really remember what you're referring to. I think it's probably from when we're talking about being more short, being more comfortable short indices. you got to be careful with the levered products for sure, but I have the same degree of comfort trading a levered index ETF as I do, like shorting the actual index ETF itself, because I know it's just correlated. It's just going to be 3x against me, if that makes sense. But I know what that means, right? I know what 3x means, so I'm comfortable. Brett on GE, like the bottom at 11.15. We hear you're starting to get a little bit closer to that, support zone that we were looking for the pullback. You get these 2 inside 5s in a row to break to the upside. I don't like this time of the day for new trades. I don't like this time of the day for new trades, but otherwise that seems like a decent trade to me. It was on my short list because it was I guess it's really more like day 4 to the upside or day 5 to the upside, but really it was 2 big days in a row and then a gap up, so I'm calling that day 3. Extended to the upside, especially for how General Electric trades. General Electric is not Palantir. It's not Kodak. It tends to not get super extended. This is a really big move in a short period of time for a company like General Electric. You combine that RDR potential with market support for the downside, plus DeMark indicator as an additional layer of probability, also indicating a short, and that's why it was on my list for the short side. But that's on my list for the short side at $97. As you approach 94, and you're entering more like 95, as you approach 94, my thought process actually flips on that. The shorts that I called out for today, the things I like to the short side, they're very specifically just trades. A day trade or maybe a 2-day trade, maybe a few days even, but like not probably into next week. Unless you're really holding on to a small percentage for a full-on reversal of the up move in the market, which is not what I'm doing right now. Yeah, so Shopify I didn't trade much until it split. Google and Amazon. I trade Google and Amazon every day. I like almost never traded Google and Amazon when they were $1,000 plus stocks. Never touched them. I was so happy when those splits got announced because I thought that they were going to make them tradable vehicles. When Amazon was $1,000 plus stock with that spread, I didn't want anything to do with it. Very rarely I would trade it. Back to Tate. If you already have a thesis on a name, say Snap, and you know it's a swing, do you find it more effective to sit and wait for better execution in the afternoon since it's a swing, or are you a fan of that early liquidity and more time for the trade to work? I know you have your buys and sells set before the open, but say if we're a range-bound market or where the price action isn't where your edge is. If I'm thinking about something that's going to be a swing trade, I would much prefer to be in it earlier in the day because I have more time to get a profit cushion. It's very hard for me to swing something I bought in the last hour. Because if I bought it in the last hour, it's going to be very unlikely that I have an appropriate enough of a profit cushion to feel comfortable with the overnight risk. Yep, no problem, man. I'm a limited fan of Apple's ecosystem. I've never been able to get into the Apple computers. Don't follow your comment at all, Nick. I know who Mariano Rivera is. That's about the extent of it. I use Spotify for music. Never complain about a profit. I don't know. I do think you go broke taking profits if you take them too early. Sebastian, can I go through a specific execution on my shorts? Sure. So, I mean, on my, especially my SPY short via UPRO, it goes back to the game plans that I was talking about yesterday. where, I would have continued to get heavier and heavier and heavier in UPro up until like SPY 415 if I had to. And I'm going to be building in there on the way up, and I'm comfortable with it, and taking off longs on the way up. I said in the morning meeting today that at a certain point, if we continue to go higher, if we get to that 414, 415 area, I'll end up getting heavy enough on the short side, like in that U-Pro, and taking enough off on the long side that I'll get to market neutral and potentially even net market short at a certain point, because the extension would be getting so extreme. So I'm continuing to work that in the same way. Teachable Q I could have executed better, but luckily it was light enough initially. I started pretty light here, like 2809, and I was adding on the way up, and I was really watching that 10 a.m. number like I explained. I was able to short at 2836 twice, get some covers, and then kind of continued to work the position. Meta was the scary one today. See, I started shorting it as an RDR. Shorted it. You can see I shorted it back through yesterday's high. These are all my short executions here. Then into the pop, I pressed the wrong button, and people in the VTF might have heard me get silent for a moment and get real nervous. I pressed the wrong button here, which I don't do that too often, and I got really heavy short by accident, and it was as this big pop was happening. So when it upticked this 214.81, I put my buy stop right above that, and then I treated these like separate trades because this was much smaller, and I wanted to keep that now as kind of a core position to try to have the short on and build into a little bit more with the market, because I really was confident the market was going to work its way down, and it kind of goes a little bit back to the thought process and what I was doing with the indices. But on this short execution, I had to have a stop, but it was an accident. I was way too heavy, so I put that out there. I got my 1-to-1 kick here. I got my 1-to-1 kick. I got my 1-to-1 plus actually slightly more, I guess. And then when it popped back up, I re-shorted this stock here that was from this, and then I got stopped out of kind of the ad trade here. That's that buy execution. And then this short and this short are smaller add-ons of the initial trade. Covered some of that there, covered some of that there, re-shorted it, cover, re-shorted a little bit, liquidated the position in the close. So, also when making a day trade, what do you look for in order to add or rebuy stock? So, ads are different than add backs. I think you're asking more about add backs, so I've gone through that in detail a lot in the past. An add is when you're taking on new risk that you did not initially have with the position. An add back is when you are taking back risk that you already had but took off, and you're taking the stock back. So you're taking your risk back but keeping the difference from a P&L perspective. And the way I do that is I build it into a game plan. So maybe you get your 1-to-1 kick, your risk is covered, you've got 2,000 shares, you're deciding that you are going to trail 1,000 of those shares, and another 1,000 of those shares you're going to sell incrementally with the plan on buyback to be able to keep cash flow differences over time. Which is, I just love doing that, because what you end up doing for yourself is, if you got that core position that you're looking to trail, and the stock gives a really big move, you're going to have stock for the really big move. But if you end up caught in a range, you're going to continue to get paid throughout the range from the takeoff buybacks that you're doing. Taking off stock and adding back, taking off stock and adding back. You're just going to continue to be putting more and more P&L in your pocket within the range, which is really difficult to do sometimes from like a pure technical trading perspective. And then on your worst case scenario, you end up zero on the trade because you had your risk covered. And if that trade fails, all of those sale add backs that you did all then become profit. So you start with a trade where you're trying to be really greedy from a reward perspective, your worst case scenario is 0. Every time you're able to sell and buy back stock, you are increasing the worst case scenario by the amount of P&L that you just pocketed. Again, let's say it's you sold 100 shares, you rebought that 100 shares 25 cents lower, the original stop loss is in place. The trade was going to be a 0 for you if it failed because you did that one time. That trade is now a $25 winner. If you do it 2 times, it's a $50 winner. You do it, 10 times, it's a $250 winner on a failed trade. So that's kind of what I'm looking for there. No, so for Anthony, would I say that adding back is like dollar cost averaging? Yeah, no, I wouldn't, because I don't. The one thing that I've seen traders make big mistakes on, and really mess up their trades, and I don't do this. I don't look at it this way, is that your software gives you an average price. And if you're doing what I'm describing, your average price ends up all over the place. Your average price doesn't matter. It really doesn't matter. And I've gone through that in detail on how the math works in previous meetings. So I'm going to hold off on doing that. But yeah, all of a sudden your average price is higher, but you pocketed this extra P&L. Your average price really isn't higher. But it kind of is at the same time based on how it calculates it, but based on the math on if you got stopped out, it's the same. If that makes sense, I'll let you guys play with your own math on that. But that's kind of how that ends up working out. All right, gang. Up for Mike here. Do you keep track of the add backs in a spreadsheet or just in your head? So I don't. You're putting in parentheses individual trades. I don't necessarily consider them to be individual trades. I consider them to be all part of one big trade. But for swing positions that I do this in, I do keep track of the add backs in a spreadsheet. And I keep track of how much money I made in a spreadsheet. I do that at the end of every day. That'll be the first thing I do when I end the afternoon meeting right now. All right. Great stuff today, gang. Super on point, I think, as far as our big picture game planning went. So I hope everyone was able to do well with it. Apologies if the name selection from my end probably could have been a little bit better on what we were looking at specifically to short, but there's a lot of opportunity, I think, to make decent money today. So I hope you guys are able to do well and are learning, and I'll see everybody tomorrow.